December 31st will be here before you know it, and there are a few things you'll want to check off your financial to-do list before the end of the year. I'm Lori, an advice-only financial planner at Backdoor Wealth, and we want you to feel empowered with your money and keep as much of it as possible. There's a lot of noise out there when it comes to financial advice, especially at the end of the year. So let's get started. Did you contribute to a flexible spending account at work? The money is use it or lose it, so don't lose it. The upper limit for some FSAs is up to $5,000, and that could be some serious money left on the table if you haven't been able to use it all. Healthcare FSA qualifying expenses don't have to be just doctor visits either. The money can be used for things like these too. If you plan to use an FSA next year, try to only contribute for the costs that you know you're going to have. That way you don't have to stress about using all your FSA dollars in December. Unlike FSAs, HSAs or health savings accounts are your money. They aren't use it or lose it. You'll technically have until April 15th to max your contributions to an HSA this year, but it's good to know if you're on track to max now. With a high deductible health plan, you can contribute to an HSA, and your contributions reduce your taxable income, grow tax-free, and withdrawals are tax-free for when used for qualifying expenses. Really, I can go on and on about the triple tax benefits of HSAs for like the next 5 minutes, but we just don't have that time. While you're double checking your HSA contributions, take a look if you're on track to maximize your 401k or 403b at work. There are only a few paychecks left in the year, so see if you can increase your contributions now so you can hit your savings target by the end of the year. And FYI, it usually takes a payroll cycle to update any changes. Next year, the 401k contribution limit is going up by $500, so think about adjusting your contributions in the new year to hit your savings target. Not a lot of people itemize their tax deductions anymore, because most people just take the standard deduction now. But if you do plan to itemize and love to give to charity, don't forget to donate before December 31st. You'll increase your itemized deduction and reduce your taxes for the year. And pro tip, if you are itemizing deductions this year, but think you might not next year, you can front load what you plan to give in 2024 this year, and then capture that extra deduction for 2023. Funding to 529 for a child's future education is always great to check off your to-do list. And even better when there's a tax benefit. While you never get a federal tax deduction for 529 contributions, many states offer tax benefits for contributions. So if your state is on that list, and every state has different rules, and you're planning to contribute to a 529 anyway, go ahead and get that done before the end of the year to see that tax benefit. The next two checklist items could be considered expert level, but are important strategies that we show our clients how to do all the time. If your income is above the limit to directly contribute to a Roth IRA, are you doing a two-step Roth conversion every year? This is also known as a backdoor Roth conversion. It's basically a tax loophole to move a non-deductible IRA contribution to your Roth IRA, and these are amazing ways to move taxable dollars to a Roth, where they hopefully are never taxed again. But these are tricky the first time, since you'll need to make sure you don't have any other funded traditional IRA accounts to make it a clean conversion. We recommend completing the non-deductible IRA contribution and the Roth conversion in the same tax year to make reporting on your tax return less of a headache, so before December 31st. When done correctly, backdoor Roth conversions have no tax impact, but they are reported on your tax return. If you have individual or joint investment accounts, these are non-retirement accounts, you may have heard of the strategy called tax loss harvesting. This is another tricky strategy we show our clients how to do all the time to offset any realized capital gains they may have had during the year and then reduce their taxes. But since short-term gains and long-term gains are taxed differently, it's best to really have a clear understanding how this works and if it's even a good idea for you. And a bonus. Two unpopular words that tend to get popular around January 1st are diet and budget. While a diet is a plan for healthy living, a budget is just a plan for healthy finances. If you feel like you've been spending more than usual, especially with inflation, the new year is a great time to try a new way to track your spending. When you know where your money is going, you're more likely to feel in control of your savings and better able to meet your financial goals. Here are some of our favorite tools to help track savings. There you have it, a short checklist of items to finish out the year strong, knowing you're getting your money on track. Backdoor Wealth is an advice-only financial planning firm on a mission to make low-cost investment and financial advice accessible to everyone. Do you have any other tips or things you'd like to get a head start in the new year? Leave them in the comments. And if you like getting regular tips on practical financial topics, don't forget to like and subscribe. See you next time.